Right, that's the word. And now let me welcome Mayuresh Joshi also to the show. Mayuresh, good morning. It's all about banks today. I can see banks everywhere on the screen today. Is there any conviction you can get after this capital infusion, or it's only about a day or two and they are still not qualifying as an investment pick?
Morning, Piyush. Obviously, I think it's a sentimental booster for all the PSU banks, which can shore up their tier 1 ratios. And obviously, I think get them above the headline number that the PCA norms do mandate. The second element obviously is post whatever infusion has come through, what do the core fundamentals actually tell us? So I think for a few of these banks, recoveries, upgrades have been quite stellar over the last 2 to 3 quarters. There have been some lumpiness in terms of reported numbers, some slippages coming through, and provisioning that is probably required that still gets extended over the next 1 to 2 quarters. Having said that, again, I think the entire premise in terms of how the public sector universe is stacked up at this point of time. A, from a valuation perspective, absolutely no concern on that front. B, I think in terms of how the fundamentals are stacked up, I think you probably need to give a couple of quarters of consistent growth getting reported to probably get the confidence back in terms of re-ratings. And that is the whole premise why the private sector banks are still doing extremely well. Whether you talk about the corporate-led private ones or the retail-led ones, asset quality pressure is not that evident. You're probably looking at very, very strong growth, and CET1 ratios remaining strong provides the premise for strong balance sheet expansion. So I'm being very, very optimistic in terms of the private space. For the public sector space, I think sentimental moves will be seen, but I'm very, very selective as well. The top tier names is something that we continue to like.
But Mayuresh, coming back to you, one word around at present, the way again markets are shaping up. Any stock which you started liking, any new theme or new idea you wanted to share?
No, so Piyush, I think one really needs to understand how the earnings profile has been so far, and earnings again has been a mixed bag. What probably comes through the general elections, and if the mandate is what the street is probably believing, I think the reform processes that the incumbent government has put in place, I think they should very well continue. Having said that, financial stroke NBFCs is spaces that we continue to prefer and have an overweight stance on. So within the financials itself, private corporate banks, as I've said, time and again, is something that we continue to like from all the qualitative parameter perspective. Gold financing companies is where our bet lies over the medium term as well, because our belief is with some respite coming through in terms of both CP rates, bond yields coming down and normalizing, you're probably looking at lesser impact probably coming on gold finance companies, both in terms of an asset liability mismatch, the kind of advances growth that they've got, the capital adequacy that they possess, and the asset quality pressures which are not evident because of the inherent nature of the gold loaning business and the LTV that they probably command. The second element as a broader theme would also be selective paper stocks, because as consumption starts moving higher, that they probably command. The second element as a broader theme would also be selective paper stocks, because as consumption starts moving higher, the supply is not going to move in that same direction as well. When you're probably talking about retailers, when you're probably talking about printing paper, when you're talking about the packaging board part, yes, I think there have been some input cost increases and pulp prices are also a tad bit down. But over a period of time, I think the demand-supply dynamics and the kind of industry favorism that it might receive, both from a top-line growth perspective and the leverage perspective on the balance sheet, I think a few of the less leveraged paper stocks appear to be a very interesting bet as well. And continuing with the theme, I think a few of the mid-tier hotel names as well, because our belief is that capacity addition, like what you've seen in the past, is very, very minuscule at this point of time. The average room rates have moved up. The revenue per passenger, who probably was a key parameter probably to gauge, I think that parameter is moving up, and utilization levels are moving up, and you're entering the strongest season, which is the summer season. So selective on mid-tier hotels as well.
Right, that's the word from Nilesh. Gentlemen, thanks a lot for coming on the show. Hemen, Jay, Nilesh, Gaurav, Mayuresh, thank you all of you for sharing your insights today. And now it's time for a short break, but stay tuned as we return back from the